set of numbers delivered by Tata Steel in the third quarter. No complaints really. Revenues grew by 11.5%, and I think the cherry on the top was also the fact that they posted the highest ever quarterly EBITDA. That's, I suppose, a little in line with what the other steel companies as well posted. Tata Steel's consolidated EBITDA was 9,540 crore rupees. No surprises for guessing that it was the India business that really led this performance, and that led to a margin expansion of 1,400 basis points at 24.1%. Profit after tax at 3,678 crores. So top line was in line with expectations, whereas margins and bottom line were above expectations. Breaking it down to segmental performance, it's like I mentioned, the India business that once again was the star performer. Deliveries were at 4.65 million tons versus 4.85 million tons in the corresponding quarter. So year on year a little lower, but sequentially improving. The EBITDA per ton definitely was amazing at 18,931 rupees per ton. The exports mix has been going lower. Now the contribution from exports is sub 11%. So remember, exports carry lower realizations. So as this export contribution lowers, product mix improves, and of course operating efficiency initiatives as well by Tata Steel have all aided the margin. So that's about Tata Steel India. Europe, meantime, the segmental performance shows that there is once again an EBITDA loss, by the company. The EU has reported an EBITDA which was negatively impacted by one-offs. So sequentially it improved, but then there were these series of one-offs taken. By the way, the overall exceptional losses were at 154 crore rupees, which was largely with respect to European operations. I think another positive for Tata Steel was also their big deleveraging drive. Remember that in the first half of this fiscal, they have already cut down debt by more than $1 billion. So they've already exceeded that annual debt reduction target that they have of $1 billion. Now, in Q3, they have further deleveraged by more than 10,300 crore rupees. And what's more, they want to continue with this drive. So they have a stated aim of cutting gross debt by 12,000 crores in Q4. I think this also shows the kind of confidence they have in the kind of numbers that the company will post. That's something that's very inspiring. So 12,000 crore rupee gross debt reduction is what we can expect in Q4. Further, they are also now getting back into capex mode. The company has said that they've restarted allocating capital on margin expansionary growth projects in India. Tata Steel BSL has done well. Tata Steel Long as well has given very good EBITDA per ton. Both of these companies have continuously improved their EBITDA per ton. I suppose the one thing to watch out for now is the plan for Tata Steel Europe. The auditors' doubt on Tata Steel EU's ability to continue as a going concern has remained in this quarter as well. It's flagged off in the auditors' report. Last quarter too, it was flagged off. This continues. So I think what sort of sustainable solution, as the company has said in their commentary, will Tata Steel eventually find will be watched out.